Welcome back. Rising trade tensions with China. Vice President Mike Pence arriving in Tokyo overnight as he gears up for a tour across Asia, where the trade dispute with China is obviously likely a key topic. It comes after Secretary of State Mike Pompeo and Defense Secretary Jim Mattis met with their Chinese counterparts on Friday. Joining us right now, Northern Trust Wealth Chief Investment Officer Katie Nixon. Katie, good to see you. Thanks so much for joining us.
Thanks for having me.
Do you think China becomes an issue for global markets?
Absolutely. It's already an issue, Maria. And, you know, I look forward to seeing the outcome of this trip, because certainly Vice President Pence used some pretty pointed rhetoric several weeks ago when he discussed the situation in China, and the discussion went well beyond the trade and tariff issue, and it went really into the realm of the bigger and more complex issue, which is the theft of intellectual property.
One of the things, President Xi of China had that import conference to show, well, we want imports.
Right.
But it seems that the Chinese are lowering tariffs on a number of products slightly. Do you think that's an indication that a deal is percolating below the surface?
Wishful thinking at this point. I think that they're trying to present a very conciliatory face to the global economy right now, saying we're open for business. We wanted to reach a deal. But again, I think the issues with the United States run pretty deep. And they run beyond just the sort of simple trade and tariff negotiations that hopefully will go on relatively soon. That will let us deal with the longer-term, deeper, more important issues. But Maria, to your point, this is very much an overhang to the market. It's an overhang to risk sentiment, and it's probably one of the biggest risks in the market right now is that we don't get some sort of a deal by the end of the year or soon thereafter, or at least a deal to make a deal.
So what's priced in? Something is priced in that we'll see a deal with China by year end?
I don't think it's priced in right now. I think it has this.
So that would be a big upside surprise then? It
would be a big upside surprise. And if you think about what's on the minds of corporate America right now, when you listen to the third quarter earnings calls, many of them, most of them commented on the uncertainty around trade and tariffs as potentially impacting their ability to spend on capital spending, hire people.
Do you think tariffs are the best way to get a deal with China? I mean, take a more focused approach. ZTE, we could have shut that company down. You'd hit a few companies or take a couple of banks out of the SWIFT system.
More surgical.
Wouldn't that gotten the message across without putting sales taxes on ourselves, which is what tariffs are, hurting ourselves to try to hurt China?
Well, I think there are certainly some perhaps intended and certainly some unintended consequences. And I think it's important also to distinguish, Steve, from the economy and the market. And right now, sort of from an economic perspective, we seem to be relatively insulated from the impact of tariffs even. Tariffs tend to be sort of narrow and deep in terms of their impact. But the S&P 500 is a different story. The S&P 500 is much more exposed to the trade and tariff situation in China, complicated supply chains, global supply chains, and the market is more exposed. Therefore, investors are much more exposed to the tariff issue than maybe they think they are from reading the front page of the paper.
Because it's all impacting earnings. I mean, at the end of the day, what does it impact, earnings or growth? So the focus today and this week will be on retail. We have major companies like Walmart and Home Depot reporting earnings this week. Characterize what you're expecting there and the broader earnings period. Where are we in terms of the growth story for the economy?
So specifically with regard to retail, all the sort of stars are aligned to have a fairly decent retail season from a top-line perspective. We have very, very low unemployment. We've had wage gains finally. So we should see some decent top-line retail growth. That said, the last couple of months have been relatively soft.
Are you worried about the sales of cars, which have been fairly weak in recent weeks? Is that a harbinger of things to come, or is that just isolated?
Actually, autos were a bright spot last month in retail sales, which was quite odd in the context of, as you say, the sort of broader trends that we see around the most cyclical areas of the economy, housing and autos, which are, I think, responding to higher prices and higher financing costs. So those have been sensitive, but the broader retail that you mentioned, Maria, should be pretty solid on the top line. The issues might be, though, on the bottom line, where these companies are facing higher input costs. They're facing higher labor costs. They're facing, in some cases, labor shortages and difficulty finding workers. As we approach the holidays, this may become more and more intense.
Not just Walmart and Home Depot that are reporting this week, too. We showed it in that graphic, but it's also Nordstrom is reporting, and JCPenney and Macy's. So it's not just the spending picture here in the United States, it's also the sourcing picture in terms of the tariffs, in terms of the imports, say that Walmart has to bring in from overseas if there are any supply problems that they're suffering. So I mean, it's a big question mark going into this week.
Of course, and there's been a lot of noise also in the data because a lot of these big companies have been sort of trying to not game the system, but trying to get ahead of this by stocking inventory early, anticipating some of the tariffs. So some of the data and some of the results might be a bit noisy even as we head into the quarter.
Yeah, but I think a lot of expectations now are that we're going to have a pretty good fourth quarter in terms of spending and just business activity.
General earnings, yes.
Somebody came on last week. They said it's going to be a knockout quarter. I'm talking spending. I'm talking the consumer and the strength of the consumer. So we'll see what happens in 19, of course, but over the near term.
So far, so good. But the incredible tailwinds that we've had are doubtless going to dissipate as we head into 2019.
So you would put new money to work in stocks right here or no?
Absolutely. We're constructive longer term on the market. We recognize, though, that because of some of these overhangs, whether it's China or we chatted earlier about the Fed, there are some things we need to get past to sort of have an all systems go sign. But and that's going to create volatility. But we do think stocks are still the place to be.
Katie, good to see you.
Thank you.
Thanks so much for joining us. Katie Nixon there.